As Disney tries to find its footing in a world of falling cinema sales, pay TV cancellations and money-losing online streaming, there are concerns about whether the company's magic spell is wearing off. Bob Iger, who was reinstalled as CEO in November after the abrupt ousting of Bob Chapek, has announced plans to double down on big brands like Marvel and Frozen, while cutting spending on more risky, general entertainment fare. However, while the resonance of Disney's brands gives it a leg up on its competitors, investors are yet to be convinced, with the company's share price nearly halving since March 2021. Despite being a self-described, massive, Disney fan, accountant Kit Parfit has no illusions about the variable quality of some of Disney's recent Marvel Studios releases, describing She-Hulk and Moon Knight as weak, and Thor: Love and Thunder as not rewatchable. While he will be heading to cinemas this month for the latest Ant-Man and the Wasp film, there is a growing sense of fan fatigue, with Kit's wife, Andrea, worried that the lengthy backstories that come from developing a franchise like Marvel can be off-putting to new audiences. Cinema ticket sales remain roughly a third lower than they were in 2019, and the rise of streaming has fractured audiences, making it difficult to generate the kind of buzz that propels people to pay for entertainment. For some, like Oxfordshire mum of two Jackie Allen, the Disney Plus offering does not justify adding another expense, while others, like Kit and Andrea, are generally growing tired of the tales after several films and a spin-off. The charge that Disney relies too heavily on recycling and reworking classics is nothing new, but in recent years the strategy has become entangled in America's increasingly bitter culture wars. Despite the risks of alienating some fans, the profit-making potential of a franchise strategy has been proven, says Janet Bosco, professor of media studies at the University of Oregon and the author of Disney Inc. It is in some ways risky, but building on already existing fans and consumers and expanding what possibilities they have to consume, if it's successful, it really can be incredibly profitable, she says. I can't imagine they will stop. For Disney fan Amanda Welch, who has been to Disney World more than 10 times and is a subscriber to the firm's streaming platform, the company's strategy of going back to its big-hitting brands has done little to dim her love of Disney. Despite canceling the service a few times to help manage their expenses, she and her fiancé, Brandon Dumont, keep coming back. For them, there's not really any Disney movie they're sick of. But not all fans share Amanda and Brandon's enthusiasm. Some feel that Disney is relying too much on its existing properties and not taking enough risks with new and original content. I think Disney has become a bit stagnant in terms of creativity, says 27-year-old film critic and Disney fan James Brem. They keep recycling the same stories and characters, and while it might be profitable in the short term, I worry about the long-term viability of the company if they don't start taking some risks. Brem points to the success of recent original animated films such as Sony's Spider-Man, Into the Spider-Verse, and Pixar's Soul, as evidence that audiences are hungry for new and innovative stories. Those films prove that you can still make a great movie without relying on existing franchises, he says. Disney needs to start thinking outside the box if they want to remain relevant. It's a sentiment shared by some industry insiders. Speaking on condition of anonymity, a senior executive at a rival studio says that Disney's current strategy is unsustainable in the long run. They're coasting on their past successes, but they can't keep doing that forever, the executive says. At some point, they're going to have to start taking some risks and coming up with new and original ideas. The executive adds that Disney's recent forays into woke storytelling and progressive messaging could also be a turn-off for some fans, particularly in conservative-leaning markets. It's a tricky balance, the executive says. On the one hand, you want to appeal to younger, more progressive audiences who are looking for representation and inclusivity in their entertainment. But on the other hand, you risk alienating more conservative fans who feel like you're pushing an agenda on them. Despite these concerns, many analysts remain bullish on Disney's future prospects. The company's strong brand recognition and extensive library of intellectual property give it a significant advantage over its competitors, and its recent acquisition of 21st Century Fox's entertainment assets has only strengthened its position. Moreover, the pandemic-related disruptions that have hit the entertainment industry hard over the past 2 years are likely to be temporary, with cinemas and theme parks expected to bounce back once the worst of the crisis is over. For committed fans like Amanda Welch and Kit Parfit, these broader concerns are secondary to their love for the Disney brand. At the end of the day, I'll always be a Disney fan, says Welch. They could release 1,000 more sequels and spin-offs and I'd still be there, eagerly waiting to see what they come up with next. Parfit agrees. adding that Disney's ability to transport audiences to a world of magic and fantasy is what makes it so special. Disney has a way of making you feel like a kid again, no matter how old you are, he says. There's something truly magical about that, and I don't think that will ever wear off. Despite the controversy surrounding some of Disney's recent releases, it is important to note that the company is still a major player in the entertainment industry. Its brands are recognized and loved by millions of fans around the world, and it continues to invest in new content to keep audiences engaged. However, the current market is challenging, and it remains to be seen whether Disney's focus on its big brands will be enough to sustain its growth. With cinema attendance still low, the company will have to find new ways to reach audiences and keep them engaged. One potential avenue for growth is the international market. As countries around the world recover from the pandemic, there is an opportunity for Disney to expand its reach and build a new audience. The company has already invested heavily in theme parks and resorts in Asia and other regions, and it may continue to look for new opportunities to expand its presence overseas. Overall, it is clear that Disney is facing some challenges as it tries to navigate the changing entertainment landscape. However, the company's strong brands and deep pockets give it a competitive advantage, and it has shown that it can adapt to new challenges in the past. Whether it can continue to do so in the future remains to be seen, but it is clear that the magic of Disney is still alive and well for many fans around the world.